Okay, hello and welcome back to the deep dive.
Great to be here.
So you've sent us quite a stack of sources, articles from the Wall Street Journal, Investopedia, Reuters, Barron's, you name it,
Mm-hmm.
all buzzing about the latest earnings from Oracle, ticker ORCL, big tech giant, lots of noise
Love
lately.
that noise.
So today our mission is really to cut through that noise. Let's extract those, critical nuggets of knowledge and figure out what's really going on behind those headlines.
Absolutely.
Think of this as your shortcut to getting up to speed on Oracle's place in this whole AI race. We'll look at the good, the bad, maybe the complex from their report, help you grasp the implications.
That's the plan. And what's really fascinating here, I think, is how Oracle's story right now just perfectly illustrates the complexities, the kind of intricate dance in tech today,
Especially with AI, right?
especially with the AI boom. Exactly.
Hmm.
So we'll be looking at, record-breaking backlogs, cloud growth, but also, yeah, those critical misses on revenue and rising costs.
Hmm.
It really raises that key question for you. Can a company actually capitalize on this massive demand without hitting some pretty significant bumps in the road, operationally, financially?
Yeah. Can they handle that scale? Let's unpack it.
Let's do it.
Okay. Let's dive in with what really caught everyone's eye first.
Yeah.
The sheer scale of Oracle's success on one particular front.
The big number.
The really big number. They reported an incredible $455 billion in remaining performance obligations, RPO.
Mm-hmm.
Now, just quickly for anyone wondering, RPO isn't cash in the bank yet. It's contracts they've already signed, locked in. But the services aren't delivered or billed, future revenue, basically.
Potential future revenue, yeah.
And this number, $455 billion, it's up 359% year over year. I mean, that just sounds like a colossal forward indicator. Huge potential stability down the line.
It is, and it's more than just, a flashy number. It's a really tangible sign that this demand for AI infrastructure isn't just hype. It's real, it's concrete, it's translating into these long-term, very sticky commitments. If you connect that to the bigger picture, it really suggests Oracle isn't just capturing market share.
They're locking it in.
They're locking it in. Significant share in this, rapidly expanding AI sector, this kind of RPO, it signals a kind of ecosystem lock-in.
Yeah.
Makes it much harder for these big clients to just switch providers later on.
Even with AI changing so fast.
And exactly. Even with things evolving at breakneck speed.
And we should probably mention who these clients are, because these aren't small deals, are they?
No, not at all.
Our sources are highlighting multi-billion-dollar agreements with, the biggest names in tech and AI you can think of.
Yeah, the heavyweights.
OpenAI, SoftBank, Meta, NVIDIA. That list alone tells you there's serious, high-stakes demand for Oracle Cloud and their AI stuff. What does that client list signal to you?
Well, that list is crucial, I think.
Yeah.
It really suggests a deep level of trust, maybe reliance, from companies that are right at the cutting edge themselves.
Right. They wouldn't bet big if it wasn't solid.
Exactly. It validates Oracle's tech, their service capability, in a way that maybe pure financial numbers can't always capture. And kind of in line with this, their actual cloud revenue, the current stuff, rose about 28% year over year.
So it's not just future promises.
No. They're seeing an immediate impact on the top line, too. And they've also boosted their forecast quite significantly, projecting cloud infrastructure revenue to hit $18 billion this fiscal year.
Okay.
And get this, $144 billion by fiscal year 2030.
Wow. Okay. That implies some seriously strong compound growth. Huge confidence there.
It reflects massive investor confidence in that long-term vision.
That forecast is definitely eye-popping. But, it makes you wonder how are they pulling this off? How are they attracting these huge clients when you've got AWS, Azure, Google Cloud out there? What's Oracle's secret sauce?
That's a great question, and it's something analysts are pointing to. Jefferies, for example, they actually boosted their price target significantly, from around $270 up to $360.
Big jump.
Big jump. And they point to Oracle's, let's call it, neutral stance in AI.
Neutral stance. What does that mean exactly?
Well, unlike some of the other big cloud players, Oracle isn't really focused on building their own giant large language models, their own LLMs, like ChatGPT or Google's Gemini.
Oh, okay. So they're not competing with their customers on that front.
Precisely. They position themselves more as a pure infrastructure provider, the picks and shovels, if you like.
Got it.
So they can attract a really broad set of customers who just need the raw power, the computing, the storage, without worrying about perceived bias or competition from the cloud provider's own AI apps.
That's a smart strategic angle.
It seems to be paying off, allowing them to basically serve everyone who's building their own AI.
Okay, that makes a lot of sense. But let's pivot now because it wasn't all sunshine and roses. Let's talk about the bad news.
Right, the other side of the coin.
Despite all that incredible growth, the huge backlog, the AI tailwinds, the picture isn't perfect. Oracle actually reported revenue of $14.93 billion, which was just a little bit below what analysts expected, around $15.04 billion. Not a massive miss, but, still a miss, especially with all the hype.
Yeah, miss is a miss.
Does that little shortfall tell us something deeper, or is it just a minor blip?
Well, it's a critical observation because while cloud infrastructure is clearly booming for them,
Yeah.
that slight miss suggests maybe a more mixed picture overall than the big RPO number might suggest.
Yeah,
Some of their other segments, like traditional license and support,
the legacy stuff.
exactly, the legacy stuff, it didn't quite hit the estimates. And this points to that ongoing kind of delicate balancing act for Oracle.
Transitioning from the old to the new.
Right, moving from that traditional on-premise software business to being cloud first. So while AI is pulling the cloud unit way up, the older parts might still be facing some headwinds as customers migrate or choose newer cloud solutions.
That classic innovator's dilemma, huh? How fast do you move away from the cash cow?
Precisely.
Okay, and that kind of leads into the costs, doesn't it, supporting this massive growth spurt?
It does.
To handle all this demand for infrastructure, APIs, AI, Oracle is really ramping up its capital expenditures. CapEx.
Significantly, yes.
So for you listening, CapEx is basically the money they're pouring into building more data centers, buying tons of those expensive NVIDIA GPUs, expanding their network. Why does that become a bad thing, or at least a challenging thing, in the short term, even with all that future revenue promise?
Yeah, the challenge is these huge investments, while they're absolutely necessary for the future,
We're going to spend money to make money.
you do,
Yeah.
but they tend to squeeze your operating margins right now, in the short term.
Okay, explain operating margins quickly.
Sure, it's basically how much profit a company makes from its core day-to-day business, before things like interest and taxes. So when you're spending so much upfront on building things,
It eats into that immediate profit.
it eats into that profit, exactly. And on top of that, as Oracle tries to scale up data centers really fast, they're hitting real-world problems. Supply chain bottlenecks for key components. Think GPUs, networking gear. Plus, inflationary pressures, things just cost more. Hardware costs more, building capacity costs more.
So costs are going up while they're trying to build faster.
Right. And those factors definitely add pressure on profitability, even if the potential revenue down the line looks great. It's that classic hypergrowth challenge, managing the costs and complexity while you're racing ahead.
Okay, so this is where things get really complex, maybe even a bit ugly, depending on how you look at it, especially if you're watching the stock price.
The market reaction.
Because of that massive backlog, all the AI excitement expectations for Oracle are now just sky high.
Through the roof.
So any miss, even that small revenue one we saw, or any hint of weak guidance going forward, that could really whack the stock price downward.
Absolutely. High expectations cut both ways.
And speaking of the stock, I mean, after this earnings report, it just exploded higher. We saw jumps of like 36% to 43% in some sessions.
Unbelievable move for Oracle. Biggest since the early 90s, apparently.
Incredible.
Yeah.
But we know, right, moves that big, that fast, they often lead to pullbacks, consolidation.
Volatility is almost guaranteed.
Always that risk of buy the rumor, sell the news for traders. So yeah, expect some serious volatility after a run like that. You really have to be aware of the market psychology here, not just the numbers.
Absolutely. And that brings us to what analysts call execution risk.
Ah, yes. The catch.
The catch, that $455 billion backlog, look amazing on paper, but it's not cash yet. It's future performance obligations. Oracle has to actually deliver on those deals.
They have to build it, run it.
Build it, run it, and crucially, do it profitably. And that means navigating all sorts of operational hurdles, getting enough specialized AI chips, finding and keeping skilled engineers, building out data centers on time.
While costs might be rising.
Exactly. Delays, cost overruns, even just increased competition from AWS or Azure trying to poach those same clients. All that could chip away at those potential future gains.
So signing the deal is step one. Delivering profitably is the real test.
That's the long game.
And that margin pressure we talked about, squeezed by the high CapEx, that could actually cancel out some of the AI upside if costs keep climbing faster than Oracle can, say raise prices or become more efficient.
Precisely. It highlights that very delicate balance, doesn't it, between expanding like crazy and keeping the financial house in order.
It really is a tightrope walk. What if the build-out just can't keep pace? Or costs keep inflating?
That's a key risk. Or what if a major client, let's say OpenAI, finds that maybe another provider offers something more specialized or cheaper for their next big model?
Hmm.
Oracle has to deliver on time, yes, but also stay innovative and competitive on price and performance. It just shows that even with a massive backlog, nothing's ever completely guaranteed in tech.
Okay, so we have all these moving parts. The soaring RPO, the slight revenue miss, the huge spending, the execution risks. What are the analysts making of all this? Our sources show, unsurprisingly, a range of views.
Always a spectrum.
Many are definitely strongly bullish. They're calling Oracle maybe one of the most compelling growth acceleration stories in big tech right now, mostly because of that AI backlog.
Yeah, focusing on that RPO number.
Some have even pushed price targets way up into that $350, $360 range,
Mhm.
clearly seeing the long-term potential.
Right. But then you have other analysts who are more, let's say, cautious on margins.
Focusing on the costs.
Exactly. They see the amazing top-line growth, they get the backlog story, but they're warning about potential margin degradation because of all that spending and rising costs.
Makes sense.
They're really emphasizing how critical execution is. Can Oracle deliver and manage costs effectively? That's their big question.
So where does that leave the sort of middle ground?
Well, many analysts kind of fall into a neutral to buy category.
Mm-hmm.
They might have upgraded their ratings recently, but they're watching very closely, waiting for future guidance, especially on profitability. The key question for them, and really for you, our listener, is how much of this exciting cloud and AI growth will actually drop to the bottom line? How much becomes real, sustainable profit over time?
Critical thinking needed, for sure. Balancing that huge potential with the very real challenges of scaling up so fast.
Exactly. Analysts are wrestling with that, just like investors should be.
Okay, so let's try and wrap this up. If you're looking for the short version here, Oracle just notched a massive win, positioning itself right in the heart of the AI boom. That colossal RPO number, it makes you really believe the AI infrastructure demand is undeniable. It's real, it's huge.
Absolutely. Hard to argue with that demand, Sipa.
But,
Nah.
and there's always a but. It doesn't mean everything's perfect. That slight revenue miss, the rising cost to build everything out, it means you need to look at this with, a bit of nuance.
Balance view, yeah.
For long-term investors, it probably looks like one of the stronger ways to get direct AI exposure in big tech right now. But if you're trading it,
Be cautious.
yeah, be ready for some serious volatility after that huge run-up. Manage your risk carefully.
Absolutely. This whole deep dive into Oracle, I think it reveals a company at a really fascinating point. Huge potential, yes, but also facing significant operational and financial hurdles.
A crossroads, really.
Crossroads.
Yeah.
And it leaves us with maybe one final provocative thought to chew on.
Okay, let's hear it.
How does Oracle's unique neutral AI strategy, providing the infrastructure but not building their own competing LLMs, how does that ultimately stack up against the giants like Google, Microsoft, Amazon, who are doing both, building infrastructure and their own big AI models?
That's interesting. Does being neutral give them an edge, or does it limit them in the long run?
Exactly. What does that distinction mean for future competition, for the whole cloud ecosystem, for the power dynamics in AI globally? It's definitely something for you to think about as this incredibly fast-moving space keeps changing.
A great question to ponder. Thank you for joining us for this deep dive. We really hope you feel more informed now, more ready to make sense of these big tech headlines.
Hope it was helpful.
Until next time, keep learning.